What's going on, guys? It is the live financial modeling stream, smarthelping.com here. I'm Jay. We're working on this agency model, professional services. It'd be great for CPA firms, law firms, or any business that has professionals that go out and do billable work, and then the company takes a percentage of that. So I went over most of how this works in the stream on Wednesday. No, I was off yesterday just to recover, and uh, we're back into it today. Today, I hope to get all of our monthly and annual financial statements updated with the data we already have in here. Um, so as you know, I've been working on this for a while now. We're going to keep going, probably take another 5 or 6 months, but I'm integrating all of my models, startup models, into a three-statement model. I'm adding a cap table, adding a bunch of different things for um, presentability, I guess you could say, in reporting. Uh, and don't forget to subscribe to the channel, like the video. Today's Friday. Happy Friday. I hope everyone's going to have a great weekend. Uh, the days are going by really fast for me now that I've been doing the stream 2 hours a day. From going from once a week, it's a huge jump, but I'm getting a lot done, and I'm going to have to go that hard to get this finished with all these startup models. If you want to purchase a template, this is available under I put it under the SaaS category because it's kind of like recurring revenue. It's not necessarily a service, but it still has a lot of logic that's similar to these other ones. You can see it's right. Oh wait, did I not put it? I know it's on the main page. Professional services. I might have put it in the industry specific. I did. Oh, because I didn't want to overlap. So it's in the industry specific as well, but if you go to the SaaS page, you can see it is here too on number 11. So that's the model we're doing here. I'm working my way down from the most popular templates by sales volume on all these integrations. I've already done the franchisor licensing, SaaS, equipment rental, traffic conversion driven SaaS. We did a car wash, product as a service, freemium, and now professional services. I'll work my way through from there, and basically it's all of these templates, industry specific startup models. That's what we'll be working through, and then the SaaS models. And I'm going in order of popularity. Don't forget to check out all of the different models I do have here. I want to focus today on highlighting the accounting tools, accounting ratios. This is great for analyzing public companies. Cash conversion cycle. This is great for anybody to track. It kind of goes in combination with your payables and receivables and inventory, but it's a great metric to try to improve over time. Uh, Receivables and Payables, this is one of the most popular tools I've ever sold. A lot of people have gotten used. There's a Google Sheet version and Excel version. And then inventory, restocking, cash flow management is the most popular template I've ever sold. Cost of goods sold inventory template measuring based on FIFO. This is the coolest logic I've ever built. A ton of positive feedback from all kinds of accounting departments. This has been a lifesaver for a lot of people, and it's really cool how it works if you want to go and check that out. All right, without further ado, we'll get in here. So I'm going to go kind of fast today. I really just, so all we've done so far is we've put in all the logic and did our find and replace. So this is all ready to go. And I just got to start doing the references to get the data that's already in here, because we're going to build off of this monthly detail that has essentially all the results of all the assumptions and drives the revenues, EBITDA, and nearly all the nearly all of the expense or all the different cash flow items we're going to use. We will add a few. And it looks like we, just real quick so we don't get crazy numbers here. Let's update this. So, well, we'll get to it. We'll just start on the income statement, work our way through. We'll see what there looks like. There's a couple things we'll have to update on the main monthly detail as well. So first of all, let's see what revenue items we have. I think it's just one type. So there's 3 professional service types. Okay. And we're saying our cost of goods sold, or essentially, yeah, I guess it could be a cost of goods sold is the wages or whatever you're paying the professionals, which is based on essentially the total billable amount, and then the cut that goes to the professionals is their share. All right. So one revenue stream. Let's get over here, and that will be row 69. We just want to make sure it's the right period. So we'll bring that over to our income statement and drag it. Okay, we don't have it. So there's no revenue. Let's see where we gotta probably update something here. Validation tab looks fine because obviously there should be revenue. If or our H lookup is going D3 to H6. I don't think it matters. That could be 0, but let's just see. No. Okay, so what could I have possibly have done? The position of the start and end month is different now. So this is doing C5. That's the start month, though, I'm pretty sure. So when I imported the global control tab in here, our positions changed from what the old control tab was on this. So now we got to update it. So C6 is the end month. That's the one we want to target, not C5. And there we go. Now we got some data coming in. I'm going to have to update that on all the rows that referenced. So this is like the crux of doing these imports is sometimes cells, the position is off a little bit, which is fine. But now we got to go and change all these. So yep, C5, this needs to say C6. Actually, you know what I can do? We can do a find and replace here. Let's just go global control, anything that says C5. So see how much time I'm gonna save right now. It's a lot, like a lot of effort as well. We'll just go find and replace. And I want to replace anything that says reference to global control C5 should actually be referencing C6 only on this sheet though, because I have other formulas on the other tabs that are potentially referencing C5 that should be. So we only want to change the monthly detail. Because on the other tabs that I imported from the other workbook, they could be referencing C5, and that's what I want them to do. Oh, whoops, this needs to say 6. All right, so that looks good. Looks like we have numbers in here now. Yep, perfect. And annual detail, I don't think matters. No, we're just summing up everything. That's fine. Perfect. The multiple is probably referencing something wrong too. Let's update that just so when we pull it into our other tabs, it's not crazy. Okay, yeah, so C6 times. So we're going to change how this is working. I'm just going to remove this for now. So the terminal value is going to work differently, and we'll pull it from the cash flow statement once that's done. Okay, so let's go back to our income statement. Now we have numbers here. Let's format this, get it out to 12, or I mean 15 width. By the way, guys, if you know of any good metaverse models, I am looking for one to build. If you have any ideas or want to see something built based on that, I'll take a break from this and build something new if it's a good one. All right, income statement. So we don't need this number. And this is, how do we want to label this? What do I call it in here? It's the agency's share of billables, but billing value. Oh, and I see what I did. So I did total revenue as the total billable amount, which makes sense. And then the remaining, and then the cost is your wages. Okay. So we're going to call this um, total billables, billable revenue. And then our cost of goods sold is actually going to be employee or um, professionals share of billables. We don't need any inventory here. And so then this is going to be our cost of goods sold here. And then the gross profit is just the difference. So it's like if I bill out, if the firm bills out $131,000 in this month, they owe the professionals 117, the firm makes 14,000 gross profit. Oh, gotta drag over the variable cost too. Okay, and let's just make sure this is the same as our monthly tab. 139.20. Yep. Okay, so perfect. Next up, we have OpEx. So I think I just broke it into these categories. We should be good. Just got to update the reference rows. So sales and marketing. Oh, no, I didn't. I just did fixed costs. and then some other variable costs here for employees. Okay, so we're gonna add these into there. So cost of goods sold, professional share billables, also professional benefits, I guess you could call it, or perks. Oh, these are more perks, which would be all of these here. For example, if you pay for them to have coffee or just whatever, a lot of different stuff, you could put in there for the cost schedule. I'll show you where that is. That'd be pertaining to all these items here, which, by the way, let's lighten these lines up. Now, I don't have any logic that says, like, if your firm is paying benefits, I guess you could work that into here to say basically on average per employee, like this could be like benefits, and how much per month per employee on average are you paying? But that's not really like uh, if you were paying wages up here, and it depends on how you structure the firm, but if these are like wages, you would have to pay, Social Security, Medicare, all that stuff. So some percentage of the revenue or some percentage of the professional share would be going to that. But I guess if you had to, you could just account for it in these variable costs here. On average per employee per month, what's the cost? So I'm just going to leave that as it is. I haven't had any complaints about how this works, and we've sold quite a bit of this template, so we'll leave it at that for now. If you wanted to add it, it wouldn't be hard. You just define a percentage of this, and it would just go into a general administrative expense. Okay, so for our costs, we just have fixed costs here, and then we'll have startup costs. So fixed, we've got right here this total, and make sure I didn't miss anything. Nope, we're good to go. And then nothing, and then these can be startup costs. Okay. Now, wait a second. Why are these all 0? That doesn't seem right. What happened here? Ah, why? So these changed from C5, C6. Ah, because I didn't have it locked. And on this one it is. So let's change these as well. Go to our find and replace. Yeah, before I had C5 not locked. On these ones it is. And I want to change that to just say 6. There we go. So that's all good. taxes are already updated. Perfect. Okay, so we've got values in here. That makes sense. EBITDA. $5 million. Okay, that makes sense. Good here. Now, see, this is where it's nice. All this logic is already in here for CapEx stuff. That came in from the other sheet. And then for taxes, this should be at D. Let me make sure. C30 and 31. Yep, those are right. Okay, so income statement complete. While we're in here real quick, let's do terminal value, which is going to be based on this, which is just checking the 12-month trailing revenue, and then that'll be multiplied by the exit multiple. Okay, so exit multiple is here. Let's go over to our terminal value, and I want to say so work summing up revenues, which is now the question. Okay, so for this, I don't think they're valued on their revenues because they're going to be so high compared to their cost of, what you're paying your employees. I think the more telling number is going to be the EBITDA. So we're going to actually do this on 12-month trailing EBITDA. So row 28. Let me update the text here. 12-month trailing 12-month EBITDA. Okay. So what did I say? Row 26? 28. I want row 28 here. So 51 million times whatever multiple is there. Then we have the amount that goes to fixed assets versus the just extraordinary income, and that's a tax thing. You could define it here. So that's good. Let me make sure it's referencing. So 71 is checking the 12 months. Yep, perfect. All right. That's great. Debt schedule, we'll have to put this in here. If terminal value, I can't decide, say enough how awesome it is to have this selector in here. It makes this so much easier to do. So if terminal value equals no, then this is just NA. Otherwise, take the end month. And then all we do is first format this. And we just say if this date equals the end month, then we're going to assume that the principal's paid off or the loan's paid off. Otherwise, just keep going on with whatever the payment term is. So to do that, if that equals that, we simply say the balance plus your interest rate divided by 12 times the ending balance. Okay, then we lock those two. Now to get a number in here, we have to assume there's some debt. So funding 250. Oh, why is that not? Ah, because we have new positions on the global control. So it's this number now, not 11. Okay, and then we go down. Perfect. There you can see, comes right through, paying off the rest of the debt on the end month, whatever that might be. One thing I want to make sure everyone knows, and this is, I've had one of the things people have hiccups. If you change this year up here to a different start year, which is fine, make sure you go on all the input tabs and make sure your dates make sense. Like these should then say March. If I change it to 2023, these should be based on dates that are 2023 or later. Uh, Same with the costs. The debt schedule, that's an important one because you'd have numbers here. And if this date was from like 3 years from when you're building the model, it's not going to show up in you'll be all off on the balance sheet and everything. All right, we're plugging along here. So income statement looks pretty good. We got terminal value in. Let's go to income statement annual real quick. Widen this out. Here, remove grid lines. Freeze this up. And we should be equal to our income statement row 59, which we are. So that looks great. All set. Awesome. Balance sheet. We could format this, but then we're going to go to the cash flow statement and start filling in stuff there. It really helps to have a template, especially when you're working with three-statement modeling. And now that I'm going to have these in every single template startup model, you guys will have a nice thing to work from. If you just want a three-statement template, I do have that. It's part of that accounting bundle I talked about at the beginning, which you can find at smarthelping.com. Okay, that's formatted. Now let's go cash flow, and this is where we're actually going to start working on next. No inventory here to worry about. Oop. Alrighty. So cash flow. First things first, we have income statement. This is pulling in total revenues in 9. That's right. Other OPEX. Let's make sure. So this is 25 and 13. So now we're going to need 13, 14, and 25. 13. Actually, we could just go 15 because there's no inventory stuff to worry about. That's the sum total. Let me double check 15. Yeah, that's the total cost of goods sold. Drag that over. And don't worry, if we've missed a reference or something, the balance sheet will tell us and we'll be out by some number. Interest calc, that looks right. Taxes, yep. Okay, so that's good. CapEx is fine. This is all fine. Okay, looks good. Okay. Yep. Okay. Perfect. So this is all good. Cash flow's all good. Now the balance sheet, 15. What are we missing on this? Inventory. So this we don't have an account for. All right. We're balanced. Awesome. And note the reason why there was an inventory line in there is because I'm using the product as a service model as the latest version of the three statement model to copy into here, which is all has all the nice new stuff and bells and whistles. And that did have inventory purchasing, and so we had to have an inventory account on that one. We don't need it for this, so we just remove it. Next up is simply, now we have to make sure our old monthly detail, which we're going to use to figure out min cash position, to figure out how much equity is required, and then that will update this. We have to make sure that matches our cash flow statement. Uh, so we've got proceeds from financing. We don't need this debt repayment because now it's just going to come right out of principal. You see right there. We don't need to worry about investor proceeds. That's going to be what we're solved for. And then this cumulative cash position is what we're going to measure. And we don't need this. All right, so now, so essentially, what are we missing? It looks like I removed the CapEx, the old CapEx, so that's good. Let's make sure I did it here too. So here, we want to make sure it's the same on the annual. We don't need this. We don't need this. Perfect. Okay. So what we're adding now is we've got sale of fixed assets is going to be an item. CapEx, taxes. Let's see what else. Taxes, we have this, we have this, we have this. Adding this, sale of business, and that's it. Okay, and now we just reference those in here. So sale of fixed assets, depreciable assets, CapEx. We're just cruising right along here. This is probably, I'll definitely finish this today, or at least all the logic or reference updates. Oh wait, that's CapEx. And sale business finally. Okay. Now we just drag that over. Make sure it's referencing everything right. Oh man. So 184 should be positive. We have to add this sale fixed assets plus taxes. 186 should be a plus because it's coming through as a negative. Taxes 187 is a plus. Okay. We'll know if it's not right when we do this next thing. So this is our cumulative cash. What we'll do is go over here to equity for the project and then min. What row is that? 193. And then what that solves for is the minimum amount of equity you're going to need to cover all the startup costs and any burn or investment in fixed assets. So there's our number. We'll see what's going on, viewer. I better get my thing out here so I can see if anybody says anything. Happy Friday. Better do a sound check as well. Test. Okay. So the 2.6 million minimum equity needed is going to flow over to the cap table, and then that should also flow to the balance sheet, and we should see a 0. Perfect. Hallelujah, we caught everything. So, because that's what the model's solving for, is to cash goes to 0, but no lower. All right. That makes sense. I just want to double check this again. We don't need that in there, but it's fine. Won't affect anything. EBITDA. Okay. I'm comfortable with that number. Our visuals are fine. So this executive summary, right, these are the updates on the other cash flow items. So let's just make sure this is right. Oh, actually, we've got to add this to the annual. It's 185. And I should be able to just sum these up. And then take this value, same math, put it into here. All right, 0 check. That's a great sign. We're moving along here, so all this looks good. Now for the executive summary, we'll pull this in. So CapEx is that. That service is fine. We don't care about this. That stays. This is fine. Oh, wait. 188. Okay, good. So this is the number we got. Loan proceed. No, we don't need this. As part of debt service now. And then we'll add proceeds from fixed assets and then proceeds. Okay, that's going to be this number here. And then let's make sure we added it up. So 21 should be a plus. Oh, we got to add taxes in here. Basically, we're just iterating a bunch of the same data in different formats. And the main one is obviously the 3-statement models, what's coming in nice. So that's positive. Now the question is, we're at 133,567. 133,567, okay. So that matches. So far we're looking pretty good here. And what's nice is, let's see, do we have to update any charts? Nope, these all look fine. The nice thing about the model is now you can go through. Oh, we'll have to update this actually. You can now go through and play with all the assumptions that were in the base model, but now it all flows to these nice new reports. So you can update these and see, you know, income statement, balance sheet, cash flow statement. Distributions looks like we're off probably. Yeah, because of this. So share for investors is now fully diluted value based on the cap table would be this percentage. And this is just 1 minus that. All right. Then cash contributions for investors, outsiders would be this number. Owners, if anything, would be then this bottom number here. Okay. Making sense. Monthly detail 196. What's that? Okay, that's the number we want. This is not the number. We'll have to update this with this total here. Okay. So in this case, our equity, our startup costs were like 1.5. Let's just double check. 1.2. So that should just be the difference. Let's double check. Hold on. Where's this 950? Oh yeah, 1.2. I get financing here, so cash flow 950 negative at the start. That makes sense. Plus, plus equity initially contributed. There we go. And then these numbers should all match. With our output. $133, or wait, 136, 177, 133, 567. Okay, with the including negative cash flow. All right. So that's good. That makes sense. 2 8. All right. Distributions look good. What I want to do real quick. I mean, this thing's ready to go. All I have to do now essentially is update our just the index tab with the new tabs we've got, and then this thing's ready to rock and roll. I'll post the update overview video and all that good stuff probably over the weekend. And yeah, it's a great improvement to the model. We'll have to obviously set up the sanity checks. It's 10:47. Maybe I might do that Monday. But before that, I want to check these other templates real quick. So product as a service. I just want to see if I did the right distribution formula on these ones as well. Yep, there's the cap table D3, the reference. So that makes sense. I must have, because it couldn't have matched without that making sense. Okay, so product as a service is fine. Freemium. Yep, same thing. That's good. Let's go. So we did product service, freemium, the web or mobile app. Perfect. You always get nervous about these things, and you go back and check everything and make sure. On all these ones I'm updating. The standard SaaS model is really a nice improvement. That was my most popular startup model ever, and it just really got some nice improvements that it needed. Now this one, Global Control C13. Which is remaining equity. Ah, right, because this one didn't have a year zero, so we just went off month one. So that's fine to use there because the startup costs are baked into month one. Okay, that was fine. I knew there was one that was a little bit different, but that's okay. And then we had car wash. It's very reassuring when you can go back and make sure. Okay, yep, did it there. I believe, wait, D74 and 77. Because I had equity funding in there. Okay, that's fine. That'll work. And then last one, oh no, we had two. Franchiser licensing. I know we did this one right, but just double check. So let's make sure everything's perfect. Yep, that's good. And then equipment rental is the last one. Okay, here. Oh, right, there was no year zero on this one either, so that was fine. It just started in month one. Okay, perfect. Well, it's 10:50. I could do the sanity checks now, I guess. So the first one's that's actually done. Actually, the first couple might already be done. Yeah, balance sheet. So this is done. This is done. Done. This is good. These ones I'll have to update. All right. So index. Annual detail. Where's our cash flow position there? 193. And what these sanity checks do is it makes sure no matter what you do to the template or change, these should always be 0. And you can always go here and see if anything's messed up. All right, so that's good. Now, executive summary. What's this checking? Summary to annual detail cash. So that's going to be that number minus this. So we're good there. And it's for peace of mind. That's why it's called like a sanity check. So you know the numbers you have at least make sense in relation to the other numbers that are going into it. Now this, so what are we doing here? 193. And then this one was a different row. Let's get this in here. It's that row. One 193, that's updated. All right, here we're checking distributions. So and what cell is that? J193. Oh, we're still off. And then distributions, is it 9? Yep, 9. It's always a 9 or 10. And then we'll run through the different timing. Oh, what is going on here? Sum of C9 to G9. I'll just do it manually right now. So sum of this minus our annual cash flow. Ending balance should be 0. Okay. And these are good. Interval distributions. We'll make sure. So on the cap table, we've got, if we scroll over here, we did a internal rate of return analysis. Okay, so yeah, this has got to go from 10 to 9. Okay. Nine. Must all be off by 1 and 16. Okay. 1,963. And again, my numbers are arbitrary whenever you use a template that I've done. You would go and put in your own numbers in all the light blue or light yellow cells. All right, we're getting there. Now, the main check is going to be, we start end month with the terminal value. Make sure we add all zeros. Let's go terminal value no. Let's add a partial year for the last year. With this as no and yes. Okay, good. Let's add it to the end of the previous year. All zeros. Perfect. Let's add a partial year on the previous year. All right. Oh, we passed all the checks. That's a good sign. Now, this template, I'm just going to have to update the index tab. And I mean, I guess we could remove these extra spaces that we're not using, so it's a little bit cleaned up. The rest of these are fine how they are. And we're done with this. We are done. All right, I'll save this. Again, if you want to purchase this template, it's going to be on smarthelping.com under the SaaS bundle number 11. $75 one-time fee. Don't forget to subscribe, like the video, and let's look at what we're going to be going into next, which is, so Monday, we'll go into the general mobile app. Now that's going to be a nice one because it's the first template I did with the SaaS model where you have retention rates that are done to a bit more of a precise way. And this is when I first started using matrix calculations. So that's going to be a fun one to get updated. And that's all I got for you.